Want hulle wil self daar bou.
Morning,
Nou, as hulle
morning
self
everyone.
daar, dan
Morning, morning.
Elize, you're on mute.
Everybody is not muted except myself. Good morning, everyone. We are letting everybody in the chat. Please let us know where you are from. It's always nice to have everybody joining us from all over South Africa. And I sometimes love seeing the videos. You know, some people look like they should be on the beach. Others looks like they have to be on in the North Pole. Very, very blankets and everything. So please let us know where you are from. I see a lot of fireflies. I hope everybody's actually going to attend the session as well and not just your AI secretaries. So that's great. Miriam, good morning. Sherry, PE, hello Natasha, great to see you. Robin, she never misses any training. She's always on. Alison, good morning. Oh, it's so great to see us. So please let us know. Upper Highway Durban. Yes, I've been very, very sad to see how sunshine it was. But even though Armand tells us last week, you guys also had a bit of cold weather. Cape Town, oh, that's going to be fantastic. I'm going to be in Cape Town next week. If you want a coffee date with me on Thursday, please let me know and we can see if I can come past your office. It's always nice to stop in and say hello. And all the names and everyone, oh, it's fantastic to see. While we let everybody in, it's always great. Rustenburg, nice and shiny and sunshine and warm. So good morning, everyone, and welcome to the Xpello Property Pulse August edition. Now, August is the month of the ladies. We really stand still and we think about what amazing women we have in this industry. They're always running, they're always thinking of everybody around them. And I think often I see people that are so focused, they forget to sit down, have a cup of coffee or tea, and just recognize what you have achieved. So that's why when I was thinking for August, our Women's Month, who's going to be my guest, I didn't even have to think very hard. And Michelle Dickens really just came to mind because Michelle Dickens is absolutely a pillar in the property industry. And it's absolutely amazing to have Michelle Dickens from PayProp. She's the commercial director. These people that don't know her yet, I don't think it's even possible, Michelle. But welcome and thank you for joining me on the Property Pulse. Let's see, Michelle is sitting very still. We'll wait for her internet to join us. While we wait for her internet, a lot of PE presence. I love it. Centurion. And we see a lot of similar names, same names coming up. And then we see new names. It's always great. And remember, these sessions are free. You are welcome to share it with anyone that's interested in listening. We have throughout the year, we have had so many good speakers joining us, sharing their knowledge, sharing their ways how to grow your business and deal with difficult situations. And I think if you guys want to go to our YouTube channel, please go subscribe, go have a look at all the webinars for the past years up there. So that's like free training. You can listen. You don't really have to watch all the time, but listen to us while you are driving or while you're busy with some administration. It can always share the training. So Leapfrog is on here, Remax, big presence. It's great to see everyone. what we are doing is today we will be speaking to Michelle. We were discussing what the market is doing, how to build a profitable business. And we're going to talk to Michelle a bit. Now, one of the things we also want to share, and I'm going to jump to it, is next month we are having Currencies Direct joining us. Now, someone put it in your diary now already. That is on the 16th of September. And Currencies Direct, can I maybe get a thumbs up or a thumbs down? Who have heard about Currencies Direct in the past? Let's see. What is the feedback I'm getting? Carol's giving me a thumbs up. Cheryl's, great. So they are not new. For those who do not know, they deal with foreign exchange, money going out of the country and coming into the country. And while we were attending the Lightstone roadshows, and there's still a couple left, so please, if you want to join us, it's there's one in Mpumalanga coming up, and there's sessions still in Cape Town, and they had a talk. And when I was listening to them, I thought, this is such valuable information that can just level up an agent when they give their services to their owners and to deal with money. I mean, sometimes you spend so much time on something that is not supposed to be your focus. And I think that is it's great to have a partner in your arsenal that you can rely on. So please join us then when they're going to share important to knows. I don't want to give it away, but there was something in there and I was thinking, this is important to rentals and sales, because people think foreign is only sales, but that's not the case. But yeah, so we're going to deal with that. We're just seeing, where's Michelle? That's always Murphy's Law. We tested everything this morning. Everything went well, and then life happens. I hope it's not load shedding that's happening. Now, I'm going to keep it up for a little bit while more. We will always send out a mailer with this event on that you guys can register, and we'll send out an email, of course, with today's link that you can go rewatch it. Now, also online, which I'm very thankful for, is my business partner Armand now, and he was really traveling. Last week he was in KZN. With all that crazy weather, and he was connecting, and he told me, Armand, I know I'm putting you on the spot, but you were saying, yes, the market in KZN was really doing good and that it was really buzzing. A lot of people attended the sessions and everything. There we go.
Hi, good morning, everyone. Yes, yeah, it was fantastic. So we had all the different events in KZN, basically the Lightstone events, and all the agents that I spoke to or interacted with basically said, listen, the market is good, doing great, the market is picking up. So there's a lot of positive things happening in KZN, but I don't think only just in KZN, I think here by us as well, everything looks better. I think the summer is approaching, obviously spring first, then the summer. So the things are happening. So if you do what you need to do and you put your head down and you put in all the work, the sales and the rentals will happen. Yeah.
Armand, I have to say, this doesn't happen often, but I don't think I'm going to agree with you with spring, because last week we were 12 degrees and this week we are 27. It feels like we are missing something in between. But thank you for that input.
But this week it looks awesome. Yesterday we had 29. I think today 29 again. So I don't know about Cape Town and Durban, but I think they've got lucky weather as well.
Amazing. Michelle, welcome at our Property Pulse event. Thank you very much for joining us.
My absolute pleasure. It's very exciting to be here, and I'm sorry I dropped off for a moment while I had some internet connectivity issues.
Yeah, we laugh and say you can be as prepared as possible and life still happens. Michelle, thank you very much for taking the time. And as I said while you were off, you are a real pillar in the property market, and you've got so much knowledge. And I have to say, if I think of Michelle Dickens, this is a compliment, né? I see Michelle and I see stats and graphs, and you explain it so nicely. I've never fell asleep. Now, it's not like when I was in school and I had to look at those type of things. But Michelle, PayProp recently released a report, and can you share some of your amazing knowledge as to what is happening in the rental market?
Elize, Armand, Xpello, thank you. I am going to share screen if I may, so that while I'm chatting through the data points, everyone can see.
Let's see if I need to give you, there we go.
Is that, can everyone see?
Let's give it a second. There we go. We can see your screen. Thank you, Michelle.
Okay, guys, thank you very much. So I have shared with the Xpello team the published Q1 quarter one data from PayProp, but I am sneak previewing for you all quarter two data because there's been some real shifts, and Q1 was a while ago. So I thought it was important that we spoke to the latest data. So you're getting a sneak peek of the information a little bit ahead of time. So what I've set the agenda out for today is we want to look at the market size, and we want to look at rental growth, have a touch on arrears and the impact of Xpello, for example, as a PayProp partner on your arrears and how to overcome that. We want to have a look at tenant income, spending and risk, and how that is changing and where the risk is. So how you prepare for that risk, or how you plan your way around that. Xpello obviously being a primary part of that. And then, of course, commission and fees, because your profitability matters in this industry. And so I want to talk about the benchmarking that we did coming into this year. So we do it every year. Since I joined PayProp, and so 23, 24, 25, and we'll be doing 2026 a little bit later on in the year, and I hope everyone will participate in sharing their info there. So let's look at the market size. Now, you know that Stats SA releases its general household survey every year. And based on the general household survey, it gives all sorts of wonderful information. It's 137 pages. The source is in this PowerPoint presentation, which I'll share with Elize, and she's welcome to share with all of you. But I've just taken out two interesting points that I think is relevant for us as an industry. The first one is, well, what is the size of our population, of the number of households we have, and then importantly, from a rental perspective, how many people rent properties? So there's 64 million of us, and we make up 20 million households. And importantly, of those households that rent, 25% of the population rents. So it's just over 4 million households in rented accommodation. And then when you want to split, well, it's 5 million because it's 4 million in formal housing, 4 million in informal housing. Is there feedback? Okay. Feedback.
Sorry, Michelle, we're checking quickly who's not muted. We will mute them all.
Oh, okay, perfect.
I'm going to quickly press the mute all button in case I mute you accidentally.
Okay, so 1 million households live in informal accommodation, 4 million in formal accommodation. You know, nearly 1 million people live in a room, and 630,000 people live in a room or a flatlet in the backyard. And what that tells me is that there's this growing population of housing that can't afford to get into the formal market. So they're coming out of the informal market and coming into backyard dwelling within a formal environment and renting out rooms and that type of properties. That leaves us with 2.5 million people, or 2.5 million households in formal rental accommodation, whether that's in a house or a flat or a complex or an apartment. That's our market. And I thought I always like to start off with what is our market size? What is our opportunity? Now, to get into the provincial opportunity, well, first of all, nearly 48% of all tenants rent in Gauteng. So if you are in Gauteng at the moment, 40% of Gautengers live in rented accommodation, and 48% of all rentals around the country reside in Gauteng. The Western Cape not doing badly either. So what are our bigger provinces? The Gauteng province, the Western Cape, and KwaZulu-Natal. So I'll focus on those three. But if you're from any of the other provinces, you'll see I've put the stats up there. So Western Cape, 30% of people or households that live in the Western Cape live in rented accommodation. And in KwaZulu-Natal, it is 18.6% of the population lives in rented accommodation. So I thought those were important numbers for us to just get out the way to determine market size or market share. Right. Then what we have is, what is our age categories? This one's important for me because, 15 years ago, the average tenant kind of peaked in the late 20s. And they moved out of rental accommodation and they moved into property ownership. Now, on the PayProp database, and I've been watching it year on year, now in the PayProp database, that's sitting at 36 years. So the peak age of a tenant has shifted to 36 years. Why? And it's not just in the PayProp data. If you look at, for example, the Lightstone data or the Better Group data, that number also shifts. In fact, they're seeing first-time home buyers at 37. So that absolutely correlates with our exit at the peak age of 36. Why is that? Well, there's a couple of reasons. One, it's become more difficult to get into first-time home ownership. Historically high interest rates, the need to have a deposit before you go and get a mortgage or a bond. Some may argue that it's the ability to move, to be flexible, but there's certainly reasons why the age is shifting out every year. It's not that there's different tenants, it's the same tenants, they're just remaining in the markets and not exiting the market. Therefore, I thought, well, let's have a look at Stats SA General Household Survey at those age groups, the 18 to 34 age group and the 35 to 59 age group. And I've highlighted there, and you'll see our youngsters are majority 85% are single. Important, because what type of accommodation does a single person need? A single person wants to rent in a unit that accommodates their needs as a single person, but housing has become expensive to rent a one-bedroom. So what are people doing? Well, this is where it was important to look at people that rent in rooms or backyards. And so co-tenancy becomes important. And how do you look at co-tenancy? I thought this was a nice way of looking at, and I'm chatting to the market about how's the market shifting and changing that allows people to renting a room and have common property area that they use. So AfriQuest does that, and you'll see City Properties released Octodec released properties last year. I think it was about 430 rooms, where it's 4 people live in a unit. Each person pays and is responsible for their own rent, but there is common kitchen and common bathroom areas that people then use, which allows people to get into the market at a lower rental value because they're only responsible for their unit, not as in traditional rentals when you have a commune and everyone is jointly and severally liable for the lease agreement. So it's looking at, Elize, how do you set up a lease agreement that caters for this 18 to 34-year-old group of single people? And how do we accommodate them in the rental market? Food for thought, I think, for our agencies. Right, so now let's look at PayProp rental index. As I said, sneak peek of Q2 data. So it's important, so I thought I'd put it out there. The link that Ruan will share a little bit later on is for Q1 data. So please go in and get Q1 data. By registering, if you haven't already registered, by getting Q1 data, you will then automatically receive the update when we soon release the Q2 data. So what is our PayProp rental index telling us? The first thing is that in May of 2026, we had an interest rate increase, right? I personally, and I expect most of the industry, expected that second increase in July. So it was really quite surprising for me that we didn't get a second increase in our interest rate hike. And why do I say that? Well, the first thing is our CPI is escalating, and it's shot up to 5%. And in fact, it's higher than that now. But in Q2, it was 5%. And our national rental growth had moved up to 5.6%. Now, I just want to tell you that I do this data monthly for the South African Reserve Bank. They want it monthly from us. It flows into their Monetary Policy Committee decision making and some of the banks as well. And so our national rental growth has increased to 6.5%. So even though I'm sharing the data for our Q2 release, which is in June, in July, it's popped up to 6.5%. And so has inflation. So with inflation going up, rental prices going up, I think it's important that we consider what that next interest rate hike could look like. Okay, this is now just quarter on quarter, where I share the data quarter on quarter, and you can see how that escalation is shifting up. Then I thought we'd look at it provincially. So having a look at national growth and saying, well, what is it doing in terms of our individual provinces? Western Cape is at 9.7% average year-on-year growth. Gauteng sitting at 4.4% average year-on-year growth, and I've popped the rental prices in there as well. So overall, national average weighted rental price is 9,715 Rand per month. So I consider the lower end of the market and how the market needs to shift and change in terms of the accommodation that we provide, so that the average rent of someone trying to enter the market isn't as high as 9,700 Rand per month. And the reason that I say this is I decided to do a rental distribution bucket. So the gray dotted line tells us if I'm a tenant and we know the average rental price is 9,000 odd Rand, where does the majority of tenants rent in the different provinces? And in Gauteng and the Western Cape, the highest bucket or the most populated buckets of tenants are in the 5,000 to 7,500 Rand rental bracket. And those are the red lines and the orange lines. And you can see as it comes down, it peaks up there and then it comes down, and there are less tenants that sit in there greater than 15,000 Rand rent per month. But look at that Western Cape line, that blue line, that just keeps going and keeps growing, because the rental prices in the Western Cape are becoming so expensive that it's driven the market into the 10,000 to 15,000. And in fact, the biggest bucket of where tenants rent in the Western Cape sits in the greater than 15,000 Rand per month. So when does that become unaffordable? When does it become? Yes, we have in the Western Cape, we have a higher average income than what we do in the rest of the country. And absolutely, we've had semigration. So we've had a lot of people that are employed, and we have the lowest unemployment rate in the Western Cape. So there are a number of factors that contribute to a growing rental growth. It's also driven by house price increases. So as house prices increase, the house price value will drive what the rental value is as well. But at some point, my guess is we have to reach a ceiling, because we have a reach of ceiling on salary as well. But it continues to grow, and I'll give you a sneak. Elise, I see you have a question. I'll give you even more of a little sneak peek. That Western Cape has now hit double-digit growth again. Post Q2 data. So it's not like it's slowing down just yet. Elise?
Yeah, Michelle, you know what was amazing? I looked at your previous slide where the growth was so amazing in the Northwest. So I was thinking, it seems to me if you want to go and invest or buying in Northwest might be an option. If you looked at the growth here, but also what we're seeing is, we see this in the market, there isn't really affordable housing or rentals available in the Western Cape, because it's not just the upper class people that stay in the Western Cape. There's a lot of normal people. So yes, I really hope that it balances out at a stage.
And I think that's where this shared accommodation, multi-tenancies comes from. And I know I've been chatting to some of the other institutional landlords that aren't listed, that are looking at how to replicate the Octodec layout, where you have multi-tenancy and shared accommodation. The intel that I get is, a shared bathroom for 4 people, not so lekker. How do you incorporate at least a basin and maybe a shower so that people aren't sharing that type of infrastructure? So it'll be a learning curve, Elise, but it's better than having, in my humble opinion, is better than having a shared accommodation where people are sharing a house at 20,000 Rand, and each one is liable for their 5,000 Rand or 4,000 Rand. And you've got a joint and several liability clause. And so if one of the cohabitants doesn't pay, it puts the rest at risk. So that's the idea behind that. Okay, then I thought we'd look at rental arrears. Driving into why you want Xpello as a partner. Xpello is a PayProp partner, so they are on our list of partners, and it's important because a lot of our PayProp customers are Xpello customers, and so we want to be able to support that relationship. So this is actually Q2. I see I didn't change my one heading over here. It is Q2 data, and leading up to this, I want to remind us all that we had very flat interest rates. We've only had the first interest rate hike in May, and typically an interest rate hike will have an effect on tenant arrears, but there's a lag of 6 to 9 months. So we're not going to feel it just yet. Why does it have an effect? Well, income is also in debt, the debt component of what a tenant pays, there's an interest component of that. And as that interest component of the debt repayment increases, it squeezes or reduces the disposable income. And that, of course, puts pressure on the tenant's overall budget. But we'll have a look at that just now. So this tells me that of the number of tenants that run through PayProp. So guys, there is 1 point, just so that we know the size of the data that we're talking about here. There's 1.5 billion Rand of rent that is processed through PayProp on a monthly basis. And that's just here in South Africa. And we're going to exclude the pound version in the UK and the dollar version in the US and the Canadian dollar there in Canada. And right now we're going live in Australia and New Zealand as well. But just in South Africa, we process 1.5 billion Rand of rent through the PayProp platform on a monthly basis. And of those tenants that process, 16.9% of them are in arrears in one form or another. What is the value of the average tenant that is in arrears? 73.5% of what their average rent would be. So if the rent is 10,000 Rand per month, 7,350 Rand of that is in arrears on average in the PayProp platform for 16.9% of the tenants that are in arrears. It looks good because it's the lowest it's been, 16.7% the quarter before, 16.9%. I take it, it's hardly a move at all. It's the lowest it has been. And the average value of what is in arrears still really low, fairly low at 73%. So what does that look like provincially? Provincially, the Western Cape has 12.3% of their tenants that are in arrears to the value of 60.5% of the average monthly rental. Whereas if you look at somewhere like the Free State, 28% of tenants in the Free State are in arrears. And the value of arrears on average is 97%, so nearly a month's rent. So when you talk about things like risk and the placement of tenants, we can factor in a little bit about the quality of performance of tenants in the different provinces. So I'll put it there in the slides, Elise, that you are welcome to share with the group.
Thank you, Michelle. I just want to say I want to withdraw my comment after that slide. I don't think it's a good idea to invest in the Northwest.
This now looks at income, because how do you pay for your rent? Well, how do you select a good tenant? It's based on, can they afford and are they willing? The willingness is the credit profile. The willingness is the credit profile. So how have they paid their other accounts in the past? If they have a history of non-payment, the ability of the tenants or selecting a tenant is based on affordability, which is driven by the income. So what is the income less what is the consumer spending, what's disposable, what's left over for rent, and we'll go through each one of those. But first of all, we've got income. Again, I've done it over a distribution over the last 3 years, and the majority of tenants, even in the last 3 years, have peaked at between 20 and 30,000 Rand per month, which makes complete sense to me. Because if you're looking at 30% of your income going towards rent, and our average bucket was in the 5,000 to 7,000 Rand, then our income would sit in the 20 to 30,000 Rand. That makes absolute sense to me. So that's the income of the tenants that are being vetted through the PayProp environment. So how are they spending their income? Well, we look at risk first. If you do a credit check on a tenant through our tenant assessment reports, we will score your tenant as medium, low, medium, or high. So minimum, low, medium, or high risk. And overall, 40% of tenants are minimum risk. 18% of tenants are low risk. Those are really good numbers. That's 56, 57% of tenants sitting in that category. We've then got an additional 14% sitting in our medium risk and 27% sitting in the high risk. But income affects the risk categories. So you will notice that tenants that earn less than 10,000 Rand per month, 50% of those tenants are in high risk. And that dark green bar high risk gets less and less and less until you see that tenants that earn more than 80,000 Rand per month, only 15.9% of them are high risk, versus 60% of them, which is low risk. So income does have an impact. And if we were to look at that area of the peak income bracket of tenants between 20 and 30,000 Rand per month, you're pretty on par and equal between 32% that are minimum risk and 31.9% that are high risk. So it is important to do proper credit vetting prior to placing your tenant, to have a look at what those income and risk brackets are telling you. I then thought I'd look at debt to income, rent to income, and consumable disposable income. So our debt to income is the green environment, and I see that I haven't completed the numbers here on the left correctly. So let's just look at the graph. Our debt to income sits at 49.6%. So that's increasing, because the previous month, as you can see in Q1, it was 46.7%. So the debt to income is increasing. It'll be driven by high interest rates as well, because that has factored into this quarter. You've then got rent to income that sits at 29.9%, so right on that 30% par, and then that leaves consumers with a disposable income of 20%. So 50% of their income is going towards debt, 30% towards rent, and 20% left over for disposable income. But I thought it was important to do it across the different rent values, the different income streams. So if you look at, for example, our tenants in the 10 to 20,000 Rand, 67% of their income goes towards debt and 40% of their income goes towards rent. There's nothing left over. In fact, there's a deficit left over for disposable income. So that absolutely means that consumers will not be able to meet their monthly obligations. If we look in our 20 to 30,000 rand category, it's important because this is where the peak number of tenants were based in terms of the highest bucket of tenants, sat in the 20 to 30,000 rand income. 56.7% of income goes towards debts. 33.5% of income goes towards rent, leaving only 9.9, 10% of the income for disposable income. These are important things for us to look at in terms of when we're selecting a tenant. Remember, this is average. So you will feel, there is no doubt in my mind that you have a high number of rejections on your applications simply because affordability doesn't enable the tenant to rent what they are looking for at the moment. Coming back to this concept of how do you have more tenants either jointly and severally liable on the lease? So how many incomes are we allocating towards the affordability? Or the idea of having, how do we have multi-tenancy that enables tenants to have a rent that they can afford for their room with shared services around that, or common areas around that. I then did something a little sneaky, and I thought, okay, well, let's look at this and say, what does it look like in terms of our debt to income, rent to income, and disposable income across different types of tenancies? So if I exclude all the debt that is more than 9 months, does that impact the overall disposable income of a tenant? So the first graph, or first bar, says my debt to income is 45.7%, rent to income is 28.9%, and my disposable income is 25%. If I then go and exclude all the old debt, my debt to income ratio drops and my disposable income increases to 38.9%. So people that have a history of being significantly in debt in terms of the age of the debt, where the debt is 9 months or older, are impacting the overall affordability. If I then look at only minimum risk tenants, so I say, okay, of the tenants that scored minimum and low risk, what does their debt to disposable income look like? And it drops to 36.3%. Rent sits at 27.5%, leaving disposable income at 36%. I then, just to prove my point, went and looked at only the high-risk tenants, and you can see their debt to income shoots up, doubles to 65.9%. And the rent to income sits at 31.3%. Now, the point that I wanted to make here is our high-risk tenants are prepared to rent properties that is already unaffordable for them, because our minimum risk tenants will look at properties that sit below that 30% rent to income at 27.5%. And our high-risk tenants, well, they have no intention of paying anyway, so they may as well rent something that is completely out of their affordability at 31.3%. That's what that slide's telling us. Now,
Michelle, sorry, I
yes.
just want to go back, and there's one thing that I really want to mention, and I think that's why that stats are so amazing. If you look at that yellow, and even the previous slide, Michelle, we have to remember that if they have so little disposable income available, even in the group for the 20 to 30,000, if something unforeseen happens, they're going to miss a payment. Because if you think about it, if they have a car accident or a big medical emergency, the thing we hear often is they had to take their pet to the vet. That's 7,000 or 8,000 rand that's gone. And then they don't have the income and there is going to be a missed payment. And I think that's what we really have to keep in mind with affordability. I think property practitioners should remember they also have the obligation. Don't encourage people to rent places which they cannot afford. I know we all want to stay in the very nice houses, but if you can't afford it, it's not going to help anyone.
It's spot on. And if you were to ask me, well, when does the average tenant default? At least I'm sure you can, maybe not, because you only take on good tenants anyway. But overall, if a tenant is going to default, he's going to turn bad in month 2.4. So going into my rental payments of month 3, I'm starting to miss my rental payment. And that speaks to tenant vetting. It speaks to the quality of the tenant that was placed, because if in month 3 we're already defaulting, the intention was, the ability wasn't there to pay rent. Last slide, guys, I promise. Here I wanted to talk about commission and fees and the benchmark for 2026. So we do this whereas the previous slides that I've been talking about are all based on the actual data in the actual transactions. So as rent's being paid, all of those transactions, as we're doing credit checks, all of that information, what does that tell us about the industry? This data here comes from our PayProp State of the Rental Industry Survey. We publish it, we put it out in November of every year, and then we publish it early in the following year. And so these would be the about 800 estate agents would participate in this, and they give us a lot of intel, a lot. But the one section that I wanted to talk about in this particular presentation was the benchmarking of the fees for 2026. I've got 4 different little sections, and I'm going to talk everyone through the first of them. The first one is procurement lease. This is where I have a tenant, I place the tenant, but I hand the property back to the landlord and the landlord manages it. So my only responsibility as property practitioner is to find the tenant. And the answers that could come in was I charge a percentage, I charge 1 month's rent up front, or I charge a flat fee. So 93% of the respondents said I charge 1 month up front or I charge a percentage. When we then looked at what was the average percentage, and we added to that we didn't add it, it's on aggregate, all the data, 1 month's rent upfront equals 8.33%. All the data of all the different percentages of what people charge, aggregate those together, and the overall upfront commission is 8.3%. So the majority of agents who charge an upfront fee or commission are charging 1 month's rent effectively. Then we asked the question about managed leases. You have 2 different ways of collecting your fees when you manage the property. Option number 1 is I manage the lease, I find the tenant, and then I manage the rent every month. And I only charge a monthly collection, a monthly fee or a monthly commission for that service. Option number 2 is I manage the lease, but I have 2 fee structures. Fee structure number 1 is I charge a monthly commission upfront for the period of the lease. Option number 2 is I charge a monthly commission every month. So where there's no upfront fee, the agency said on average, the monthly commission that they charge is 9.7%. And there's a range. I mean, some people are charging 4%, some people are charging 20%, but overall the average is 9.7%. Bank that, and let's call it 10% for, simplicity's sake. So 10% is the average monthly lease. The second category of agents, who by the way now is a bigger proportion of agents that charge both an upfront commission and a management monthly commission. It's 56%, charge both. Upfront commission of 7.2% of the value of the rent upfront and 8.92% monthly, so call it 9%. Effectively, they're giving away 1% than what the monthly managed lease only is charging. So they charge 10%. When I charge upfront and monthly, I'm charging 9%, so it's 1% less on average, but I'm getting 7.29% of the value of the rent upfront. So in total, what is that? 16% versus 10%. Overall, you're getting 6% commission more over the term of the lease if you charged an upfront fee. And I think the conversation today is, am I one of the agents that charge only a monthly fee? And if I am, should I be considering charging an upfront fee? And if I do, I'm really nervous. I know you're going to be sitting there saying, oh, I'll never get away with that. Then charge a smaller amount. put it in your lease and charge it at 2% or 3% because you're not charging for it at all. It's the most expensive part of the lease. Of your expenses, Elize, is finding the tenant. And as we know, you then have a tenant that cancels early, and then you're doing all that work of finding the tenant all over again, and you're not getting paid for the work that you've done. And it's particularly difficult to implement it in your early cancellation if you don't have a fee to base it on, which is what the landlord paid up front. So ponder that, food for thought. My intention is to make you all more profitable by finding extra revenue for you in your portfolio. I've got 5 other fees to talk about, Elize, and then I'm done because there are many questions.
Michelle, I want to say I'm so glad you're going to talk about the other fees. I see there's already a question popping up.
Okay.
But please explain, and I hope the people that haven't thought about this today, you walk away, you think, my business is going to survive and I'm going to grow. So Michelle, please share.
So there's a couple ways of making yourself more profitable, right? I can make myself more profitable by managing more properties at exactly the same fee as what I'm charging at the moment. I can make myself more profitable by having rental growth increases, and that will effectively drive the value of my monthly commission because it's commission based against the rental. I can make myself more profitable by cutting costs. That is a terrible idea if the cutting costs are looking at how do I cut services that affect the quality of the work that I perform. Like, for example, I'm going to cut landlords. I'm going to cut my rental agency completely and DIY my own rental because I think I can DIY my own rental as good as the agent can. They can't. I'm putting it out there. So the service that the landlord says is I'll cut my management fee to my agent and I'll DIY it myself. So cutting services to reduce expenses, to make yourself more profitable, that's a borderline for me. The other way of doing it is, well, how do I increase the fees that I'm charging to the tenancies or the landlords that I have at the moment for services that I'm actually performing? So one of the changes in the industry that we've seen over the last 4 or 5 years is this shift from just charging an upfront lease fee or admin fee to the tenant that qualifies that you sign the lease with, to charging an application fee on every applicant. Why? Because there's a direct cost to an application. The application comes with, you've already done a viewing on it, you've driven out, you've showed the property, you've had a viewing, you've given them an application, you're going through the process of the administration of that application form, you do a credit check on them, and then you decline them. And you repeat that 5 times, and then you find a tenant that's acceptable, and now we can place the tenant, but we've already spent costs on rejecting 5 applicants. So the charge is to charge, or the fee is to charge an application fee on all tenants, regardless of those who are accepted. And yes, you can then say thereafter, if you're a successful applicant, we'll deduct the application fee off the upfront lease fee. So on average, application fee sitting at, you won't believe it, 732 Rand per month. Now, again, there are going to be some agents that are going to say, I'm never going to be able to get away with that. I always say, well, then start low. Start your application fee at 250 Rand. Run that for a month, see how that works. And if you are not getting pushback, then next month, increase it to 300 Rand and see how that runs. In the following month, increase it to 350 Rand. You will find your ceiling. When you have pushback, you know I found my ceiling, and you reverse back one to the 300 Rand or whatever it is. But on average, 732 Rand for an application fee. Upfront lease fee sitting at 1,155 Rand. You'll see that over the years, that number hasn't really increased because there's been the shift of agencies moving to an application fee. So again, if you haven't applied this in your business yet, that's the shift. How do I now start charging the application fee? How do I recover it? How do I make sure that I'm getting paid for it before I sign an actual lease agreement? And then 1,155 Rand is the average lease fee. Monthly tenant admin fee, gosh, we're now over 50% of the market is charging this. I think about companies like Just Property who have been charging this fee for 17 years. So this is not a new thing to the industry, but it has been very slow in its uptake. We're now sitting at, I think it's around about 55% of agencies are charging a monthly tenant admin fee, and the average charge is 112 Rand per month. That means if you have a portfolio of 100 properties, you are collecting 11,200 Rand per month without any expense allocated to it. You haven't yet, it makes you more profitable just by the fact that you can start to charge for the services that you already offer. You can't go in, ladies and gentlemen, and do a blanket charge across your entire portfolio. You have to do it on renewal. You have to make sure that it's in your lease agreement. You can't charge a fee that's not in your lease agreement. Again, I've had clients that say to me, "Oh, Michelle, 1,000 properties. I'll never get my tenants to do that." And they start slowly. And the one lady said, "I'll never get my tenants to do it." Bearing in mind she's in the Western Cape, she's at 250 Rand per month for a monthly tenant admin fee for her rentals. And she had 2 tenants and said, "What's this for?" Well, it's for the services that you get. So if you're, for example, a PayProp customer, you get access to your tenant portal, which gives you all of your lease agreements online, and it gives you access to load your maintenance online. So there is a benefit. You're not getting it for, you're not paying for it for nothing. But it helps to recover the PropTech that you already have access to or that you're already spending money on. Then it's the incoming and outgoing inspection. Blows my mind away that some agents still don't charge for it. If you don't charge for it, it's time to put it in your lease agreement. Incoming inspections on average are 624 Rand per month, and outgoing inspections on average are 548 Rand per month. That is nearly 1,200 Rand on every tenant churn. So when a tenant churns, your incoming inspection the landlord pays, and your outgoing inspection the tenant pays. Why? Because you can take it off the deposit, so it doesn't impact his cash flow at the beginning of the lease agreement. Elize, that is a presentation for today, and as I said, I'm very happy to take questions in the last 8.
Michelle, I want to say thank you very much. I was amazed by those numbers, and I'm seeing just some of the comments where they say, I see a lot of people are asking 400 to 450 Rand for applications, and I'm so thankful for it, because what we've seen at Xpello is we can immediately see if people are trying to cut cost by cheap reports. Those reports that doesn't really say anything. And I'm thinking, if we can't even gauge or get information from the report that is helpful, how is it enabling you to make an informed decision? So we see that immediately. And please go have a look. Just on the admin cost, Michelle, how often did we phone our bank and say, "Listen, why am I paying banking fees?" I'm quite sure there's benefits. None of us know it, but no, we pay the fees. We pay them to keep our money. Hey, Michelle, is that not even bad? So
the bottom line is that if we look back at how we ran our businesses 20 years ago, PropTech wasn't as accessible, and there wasn't as much of it. The PropTech that we have now is to help us to grow and scale our businesses. So if we had to rely on doing everything manually still, we wouldn't be able to grow our businesses. So we use PropTech to scale the businesses, but that comes at a cost. If you use an inspection application, that comes at a cost. If you're using a tenant vetting check, that comes at a cost. If you're using a payment processing, and of course the best in the world is PayProp, really, I do say that the best in the world, there is no other PropTech anywhere globally around the world that has managed to do what, even here in South Africa, there are mimics, but there is no one else in the world that manages to ring fence the money at the very bank account, at where the money sits, ring fence it and ensure that it is only distributed to where it needs to go. And you don't accidentally pay Peter's money to Paul, by accident or not. The ring fencing is what protects the actual cash in the bank. And no one else in the world has done that, but it comes at a cost. So how do you recover that cost? And that's the admin fee. And you know, I think about a client who 2 years ago said, oh, I get it's a different client. I'm always giving examples of different clients. This one may even be on the, I'm just looking at the, no. So this particular customer said, oh, I'll never get away with that. He's in Cape Town. I'll never get away with that. I said, okay, we'll start at 60 Rand. Next month you can make it 70. You'll find your ceiling. Anyway, a year later, he says, no, I've implemented across my whole portfolio. As the renewals were coming in, I was implementing it. But you know what? I forgot to increase the price. So it's all sitting at 60 Rand. And I said to him, well, I suggest you just pop it up to 100 going forward because you're in an area that you can do it. And now you're comfortable and confident in order to manage it.
Yeah, Michelle, and I think that's what we have to do. You have to go into the market. You have to see what works and what is the best benefit. And I mean, I just have to give a couple of compliments before we run out. We love how the PayProp statements look like. It's clear, it's understandable. We can go with all our Xpello matters on those reports, and we don't have to use a deciphering a system that we have to do with something. So firstly, good to that with PayProp on their systems and their reports. When people apply using your reports, I think you guys have upgraded it a bit. It looks amazing. And we can see it, it's understandable, and it gives us all the information. So from Xpello side, we are always happy to use and deal with our PayProp clients because we get all of that information. Now, Michelle, we are running out of time. And as an industry leader and as a lady that has accomplished so much, a few parting wise words of encouragement to some of our principals online today, or agents online.
Well, if you are an ocean, ladies, be an ocean. Don't make yourself a pond just because the people around you can't swim. And so I think about the analogy of little raindrops falling into rivers, falling into dams and flowing into the ocean eventually. And maybe today you are a raindrop, but keep working. Learn as much as you can about what it is that you're doing in the industry, the technology that you're using, be an expert at that, make yourself an ocean, and then just be it. Be the ocean.
Oh, Michelle, that is beautiful words. That's why you're such an inspiration for me. The fact that you're saying to people, grow, be adaptable. Thank you very, very much. Michelle, thank you for your time, your knowledge. You did mention, are we going to be able to share some of your slides or just the presentation?
I did. I said that I would share it, and I will share it. Remember, it's pre-publication, guys. So it's hot off the press.
So you're getting this because you have access to Michelle and Xpello has arranged it. You have the right power partners on your panel. Thank you very much, Michelle. Be blessed. Keep well. Enjoy the rest of your Women's Month, and then enjoy spring.
Thanks, everyone. Thank you.
And then before we end off, I just quickly want to share our screen again. If you missed the initial screen, you'll see Currencies Direct. There's a QR code and the link will be shared in the chat if you guys want to go and register for next month's session on the foreign exchange. And if you guys have any topics or any questions that you want us to talk about, please send me an email, elize@xpello.co.za. We'll drop it in the chat just now if you don't have it. Or actual fact, I can do this. But it doesn't have my email. So I'm going to drop my email address on there. Please send me an email. We will make sure that we get the experts. We will talk about it and we will share our knowledge as much as possible. So thank you very much for everybody's time. We will share the email, we'll share the video and the slides. Have an awesome, awesome day.
Thank you.